High Cash Value Life Insurance 101. Now keep watching for all you need to know on what high cash value life insurance is and why it's better or worse than other types of life insurance, and how to know which is the best choice for you. Let's start with the different types of life insurance because this gets confusing for a lot of people. Most of us have heard of term life insurance. Term life insurance is simply death insurance, right? It only pays out when you die, and it doesn't pay to you, does it? It pays to somebody else. It's great, it's cheap, it fills a need, but ultimately term insurance only lasts for a certain period of your life, and usually by the time you get to your 70s, you've already paid for your death benefit at that point. So if you live too long, it actually becomes a waste of money. But while you're younger, it is cheap, and especially if you're paycheck to paycheck, I do recommend that term life insurance is better than having nothing. The second type you might hear about is universal life insurance. Now, universal life insurance is considered one of the permanent life insurance options. Universal life is like a term insurance chassis with the ability to have savings on top of it. So for example, I remember back in the early 2000s, everybody was talking about Lexus, right? And they're saying how amazing the Lexus car is. And this is even true in the 90s, but I remember in the 2000s I was looking at it because there's other financial advisors driving their Lexuses around. And is it Lexuses or Lexi? Whatever. Anyways, they're driving their Lexus cars around. And what I found out later was that Toyota had the same exact parts that they were providing to Lexus. So when you look at the Toyota Corolla, you realize it was the same as the Lexus models they were creating, but it was like half the price. So that's kind of like what it is with universal life. It's kind of like buying term insurance with an extra savings component, but you're paying more, right? You're paying more for it because you have this cash value that's building and growing. This cash value, which we were talking about today, allows it to grow and build. The problem with universal life is that it actually gets more expensive over time, just like term insurance, but it gets more expensive every single year. So you do have to be careful because if you don't build up enough cash in there, you could actually run out of money when you get older and have to pay a lot more to keep it active. So you do have to be aware of that. Of those universal life types, there's indexed universal life. There's also variable universal life. Index is set to an index like the stock market, but it'll have a floor where you won't lose money, but it'll also have a ceiling where you won't make beyond a certain amount, like 9-10%. Now, variable universal life means you're in the stock market. It can go up or down. You can lose money. I used to love selling variable universal life until after Y2K. And then when everybody was losing their money and having to put more money in to keep it going, I realized there were some faults there. So I went more the indexed universal life route. However, I noticed there were some limitations to it and there were some risks because of what I mentioned. Costs keep going up. The stock market may not always give you a great return. And so there's some things that we're just not sure if it will really work. Well, that's where it comes to this next type, this third type of life insurance, which is whole life insurance. Whole life is dang boring, okay? Whole life insurance really is just similar to universal life, but it doesn't have this term chassis. It's actually the opposite. Rather than getting more expensive over time, it starts a little bit expensive up front and then it gets cheaper over time. So it's reversed. The other thing is it still has cash value. You can grow this tax-free savings account inside of it, but it's guaranteed. It's guaranteed never to lose money. It's guaranteed to usually make at least a 3% or so return depending on the insurance company. And most of them have usually been paying at least 5-6% returns lately, even in this lower interest rate environment that they've been in. So those things can grow, but it's very boring. It's very stable. The whole point is you're supposed to have it for your whole life. The premium is set. Where universal life, there's actually flexibility in the premium. Where whole life is just the same premium the rest of your life. Great if you believe in inflation because that means the premium just gets cheaper and cheaper, doesn't it? Now, many people will ask about infinite banking and what to use. When it comes to infinite banking is simply this. You're able to, with this cash value that are in these policies, borrow from them, turn around, use that money to then go and either 1, pay down debt, or 2, you can go and invest with it. Heck, 3, you can even put it into your business and use it to finance your business. Did you know that Walt Disney actually used his infinite banking, his whole life insurance policy, to go and start up Disney World? In fact, that was the collateral he had to use before the banks would put any of their own money in. So he actually used his whole life to help finance the first part of it. So you can actually borrow from the insurance company because you've got that money in there guaranteed, just like a savings account. You borrow from the insurance company to then turn around and invest in something that can give you a great return. The good news is this, especially if you're using whole life, which is best for infinite banking. Universal life doesn't give you this effect. But whole life does, is that you can actually be earning money in 2 places at the same time. Because with whole life insurance, the thing is they're still paying you money here. They're still paying you interest on this money over here inside your life insurance policy. While you get this line of credit from either a bank or from the insurance company, you can take that money and invest it. So what ends up happening, if you use that cash flow from the investment to pay back towards that line of credit to pay it down and then reinvest again, then pay it down, reinvest again, you just keep cycling your money through as if it's just like your savings account. What ends up happening is you make more in interest in your whole life policy and you make money in whatever you put that money into, whether it's real estate or whether it's your business or whatever it might be. You make money here and here at the same time. You double dip. You make money in two places at once. That's the beauty of using infinite banking, and specifically if you use it with whole life insurance, where it actually allows you to earn money here while you're also investing with it too. Universal Life, they do what's called a wash loan at best, where they do have an interest rate charge, but they negate the interest rate by crediting that money. And so you just get a 0% loan, but you don't earn any interest. You don't get any compounding interest. But with whole life insurance, you can compound your interest and also invest it to make money over here. So as I told one of our dental clients recently, they said, well, how does this work with my real estate investing? I said, well, what's the real estate investment paying you? 10%. Great. Well, you're making 10% over here, which you would do if you just took the money out of your savings account and put it there. But guess what? You can actually use that money from the life insurance instead to invest. It's still growing in here tax-free. By the way, not only is it protected from the IRS that way from taxes, but it's also protected from lawsuits and creditors in most states where they cannot get to it, even if there's millions of dollars in there. And if you ever want to get financial aid for your children for college, it does not count against you as an asset. Ding! So that money's growing in here and it's growing over there. So I said, even though you're earning 10% in that real estate investment, you're also earning money here at the same time, which earns you maybe in total about 11, 12, or 13% interest over time. That's way better than just taking money from your savings account and making 10% interest. You now make money in two places at once. That's how you can use it. You can also use it for business purposes. I have several clients that will actually use that money, invest in their business. Maybe they're doing a marketing strategy or they're buying some equipment for their business, wherever it might be, and then they use the money, the returns they get from that, to then pay down that loan, and then they can use it again. And so in many cases, they hardly pay anything in interest while they're still accumulating interest at the same time. It's just a more creative way of really creating this tax-free, supercharged savings account for you. Ability for you to be able to make money in two places at the same time. That's the key. So remember, you could get term life insurance if you're paycheck to paycheck. I definitely recommend that's better for you. Now, if you're better than paycheck to paycheck, if you can put away at least $10,000 a year that you're trying to put into savings, whether to invest in business, into investments or real estate or savings, heck, even if you're putting that money in a 401k right now, this could be the ability for you to be able to grow this money tax-free, use it and take it out tax-free, but also make cash flow from it now versus waiting until you're 59 and a half trying to put it in a traditional retirement account. It kind of sucks, right? So we don't like to do that at all. You know, another option too, I remember one creative strategy you can use with this is I had a client where they were looking to buy a building for their business. And so he was saying, you know what, Chris, the biggest cash I have, if I want to be debt free, I can cash out all this life insurance that I have and use it to buy this building. And I said, you know, you could, but let's not do that. Let's instead get a bank line of credit against that policy and go in and buy that building. And in fact, I said, you might even ask the bank, your own local bank, ask them, hey, could I get a better mortgage rate if I use this as collateral instead of just using the building? So he went to the bank and he did. He got 2% lower than the going rate at the time, got a dirt cheap monthly payment on his mortgage. He was able to build that. In fact, he even got a bigger loan than what he had in his policy, got a bigger loan from the bank, was able to get great rates, great payment, and then he was able to turn around a year and a half later and have the bank release the lien off of his life insurance so that money was still free to use again. Cool thing is, they kept the terms the same. So he ended up having dirt cheap insurance. The renter that was in the building more than paid for his mortgage payment. He was living in his building or working it out of his building rent free. That's how cool it is. There's so many ways you can use this. Have people using this for their college savings account, or if they don't go to college, no problem. You can use it for whatever the heck you want. You don't even have to give it to your kids if you don't want to. You can essentially disinherit your kids if you wanted to do that. So there's so many different ways you can use it. But how do you know if you have the best one or not? That's the tricky part. The one guarantee we have is that we won't BS year round. We'll make sure that if you talk to our people, we'll offer the best rates. And if you do have something that's better, we'll tell you, because we don't want to sell you something that's not going to be better for you anyways. And if there is something better out there, apples to apples, we want to know how they did it because we want to be able to do the same thing. But if you want the highest cash value, the highest return on that cash, lowest cost policy, we're the people to talk to. You can always reach out to us at moneyripples.com. All right, if you want to learn more about this infinite banking thing, check out this video, Is Infinite Banking a Scam?